So you've been in your house a year, you're loving your new space, and you get a letter that your mortgage payment just went up, but it's a fixed rate payment. So what that just happened? Hey, Ray Williams, Mortgage Master Group. Today, we're going to talk about escrow shortages. And then at the end, I'm going to share something with you that you can prevent it from happening all the way from the beginning or from it happening going forward. So stick around and stay with me, okay? Being a first time buyer, pretty amazing, right? Like you get into the house, you made that decision, you cut away from renting, which with affordability and rising home prices, obviously something you didn't take lightly. So then you're told you got a fixed rate mortgage. You get into the house, a year down the road, you may not even know, and you suddenly notice in your bank account that the payment went up. Who do you even talk to find out what happened? Well, the first thing you need to do is log into your escrow account on your servicer's website, and you can find an escrow analysis. This is something they do once per year. So imagine year two. The first year, you just kind of absorbed it because it went up $30 a month. Sucked, but you absorbed it. Second year, you get notification that your payment's going up $400. It's almost $5,000 a year. Does your budget, with student loans possibly just having kicked into repayment, possibly having a child now, what does that do to your budget? Well, maybe you've seen an increase in your earnings because we have had wage inflation, but $400 is real money. Now what? So you log into that escrow account and you find out, sure enough, it's the escrows. But how and why? Two reasons. First, property taxes, or second, your homeowner's insurance. The county will send you a letter, guys. This does happen. When they're going to assess your property, you get a letter about it. So does your insurance agent. They send you a letter as well. Most of us opt for those paperless settings. This may be a place where there are a few you don't opt for paperless. Mortgage, maybe. Insurance documents, important financial documents, may be ones that you don't want to have on a paperless setting. Why? The insurance company will send a letter out 60 days before your policy is going to renew. Have your agent do an analysis for you so that you can get back to the mortgage company. I'm going to do a video on this topic separate. The taxes, okay, that will also be sent to you. So the lender has to be able to have enough money in escrow, and they're allowed legally to hold reserves, but that off of forecasting what they need to pay your taxes and insurance. Sounds a little broken, right? Like they're forecasting and then they're going to message you and say, hey, we need to increase your payment. What can you do? Well, I mentioned that there's a few things you can do. First and foremost, I talked about the one, turn off the paperless settings on your insurance. When your renewal comes, get with your agent, compare to last year. If it went up a little bit, you're probably fine. If it goes up more than, say, 10%, you need to talk to your agent, have them analyze what can be done so you don't lose coverage, don't see a massive increase, and also have your agent shop for a better insurance policy. With the property taxes, you can dispute the valuation. Be careful because it can also bite you in the ass and your taxes can go up. So do research on that before you do it. As far as what else can you do? There's a few other things that you can do to help offset this. You could budget a little bit extra every month to escrow. Not necessarily the most fun thing because it doesn't pay down the balance and it does not apply towards a tax deduction. But there's another thing you can do. Now, this might involve you understanding how disciplined you are with your finances, right? Because if that $400 a month really was going to hit you, does it make sense to do this next thing? And what is that? If you have a conventional mortgage, this can work very well for you. Because if you exclude it from your payment, now you're just paying principal and interest, maybe mortgage insurance. This is where the discipline comes into play. You have to take the money you would have otherwise sent to the mortgage company and ship it to, call it a high yield savings account. When the taxes become due next year, you have the money to pay the county on your own. With your insurance agent, you can ask them, what are my options for repayment? Because the mortgage company pays the insurance 1 year in advance. That's no longer coming out of your checking account. Take it on the first of the month, put it into the high yield savings account. Then you can have your insurance agent debit from there, and you've allocated the money and you're only paying what is owed. So, how can you even prevent this all the way from the beginning? Well, again, if you have a conventional loan, ask the loan officer about excluding your escrows from the payment. You can avoid all of this drama all the way from the start. I really hope you found this information useful and helpful. I get a lot of questions on escrow shortages. If you do, make sure to subscribe and like this video. Share it to friends because everyone has an escrow account. If you've won the Powerball, you still have to pay taxes and insurance. Comment below on anything you've learned over the years about your escrows and or how it's affected you.